Good morning, guys. Can everyone hear me clearly? And is the video coming up on the screen well? Okay, JD, thank you. Good morning, everyone. I hope everyone had a good day yesterday. If I have time at the end, I'll go over the charts. I didn't do a trade review last night, but yesterday was a day in balance, which is very common to have after we have a day like we had on Monday, which was essentially long liquidation day, that we follow with the balance day, and it's not uncommon in normal markets, which we have not had as of late, to have normally 1 or 2 days of balance. Sometimes that extends to 3 or 4 days of balance. Right. The concept I'm working on is that we are going to be that we're going to stay in a non-trending market, meaning over a period of time we're simply going to be range bound. Hopefully for the next couple of weeks, that would be really great news for us. And hopefully the range is extending from 1830 up to 1877. That would be a 40-point range, and would give us tons of opportunity to make a lot of money. So this morning I sent out a chart. This is the chart. So let me give you the cleanest version, and I haven't published this yet, so let me go ahead and publish it real fast. I apologize, so everyone can have a copy in front of them. Let's see if I did this here yet. Nope, but I will modify this really quickly. And then let's get rid of this. Move trend lines. Okay, there we go. Give me just 2 seconds, guys, and everyone will have a copy sitting on their desk. There we go. Let's just stretch this out a drop and move this over to the left, and I think that'll cover it. Let me drag this over. Okay, so I just posted that on StockTwits, and it should come over on Twitter as well in just a moment. So let's go through the scenarios today. So yesterday we definitely had a balanced day. So our first clue that we are breaking out of balance would be that we would need to, well, that's not the tool I wanted, but this is. So the first thing that we have to do is get either above Globex high and hold, or below Globex lows. That's the first clue that we are pushing for something other than an inside day. The range was relatively tight, particularly given the normal, quote, normal market that we normally experience. I believe yesterday the range from top to bottom was 64 down to 48, which is about a 15-point range, give or take. And normally we've been having 20 to 30-point ranges on non-balanced days or trending days, however you'd like to call those, or range extensions preferably. So we are opening near, or it looks like we're going to try to open near this 1867.50, and we'll see how high they push it. So if we can get above this 1867.50, the first move up that I would look for resistance is going to be into this 1871 to 1873 zone right here. Now, the amount of rotation that we get based on where we open, right? If we open at 1870, if we're able to push to 1870 before the open, right? I'm going to want at least 6 points of rotation up into this zone to at least be able to call or feel comfortable taking this trade. It doesn't mean that I won't take a trade at the back of the zone based on price action, but to say it ahead of time, I need to see what size rotation we're going to have. Obviously, from 1866 to push up to 1873, that would be a 6-point rotation, and that would also be attractive because as everyone should know by now who follows me, I usually use a 2-point stop behind the back of the zone. The difficulty in that, and this is just from a psychological standpoint, it is hard for people to take a stop here and reload back into this zone again. And often what ends up happening is they miss this, they stop on this zone and they don't take the trade on this zone, and this zone ends up rejecting out. So the way that you handle that is, if you know you can't take 2 stops back to back in a very quick period of time, which can happen in the first 30 minutes, you skip this zone altogether and you shoot for this zone as your first point of trade location. Okay, that's the easiest way to handle that. And if you do that, you simply accept that you may miss the trade or the rotation out of this zone. Okay. Again, I'm trying to gear this more and more because I don't want this to turn into a trade calling service. It is not the idea behind this, but instead to teach people how to trade for themselves and how to make good trading decisions. I can assure you, if you're losing money or you're having a hard time staying consistent, the answer is not on the screen or in the charts or in the dome, but you're both the trader himself or herself is both the problem and the solution. Okay, and you simply have to make decisions on what you can live with and what you can't live with. Me personally, if I could not handle taking a stop here and then I miss a trade here, I would rather do this reverse, because my odds of making money out of this zone are much higher due to the stretch than they are in this zone. Okay, so what are going to be some of the keys out of the gate that we're going to want to watch for that could get us in trouble? First of all, open drive higher. How's that categorized? We are gapping. We have almost a 7-point gap. After that 7-point gap, first, there will be little to no attempt at gap fill or half gap, which would be approximately right in here somewhere. Okay, we'll get either one very large stick in the first 5 minutes. Usually that bar is anywhere from 4 to 6 points long, followed by a few smaller bars, then continuation up. And that first 5-minute bar is the low of the session. And often, if we have truly a trend day up, is the low of the day. The other way that I can look is by simply a series of 3 strong bars up. And you take this picture and you just flip it on its head and turn it down. You can have that same picture. Also, this is simply these two are simply the easiest ways to identify it. It's not the only ways to identify it. If you'll notice in the last couple of days, we actually had on Monday what looked to be like an open drive higher and then a failed open drive higher. We had a nice fat stick right out of the gate, and then it reversed and got sold. The key to all of these days, both up and down, has been strength in the NQ, both to the upside and the downside. I cannot stress enough that NQ has been leading us. Even if you're not trading NQ, it's worth keeping an eye on. If you see ES banging out new highs and NQ not coming anywhere close to banging out new highs, I would be concerned myself, and it would be enough of a concern that I would actually exit an ES long if I didn't see NQ participating with it. Even if it was a head fake, I'd be totally fine with that. Okay. After we're up, the other characteristics: lack of counter rotation to the downside. In addition, we would have the speed too. Simply the move up will be faster and stronger than any move down. It'll seem like it takes a lifetime to get a move down and about 10 seconds to get a move up. Also at the zones, you will often see that it'll just sit when it gets to the zones with very little counter rotation. Remember, for me personally, my trade rule is I will not let a trade sit beyond 25 minutes and have any significant risk. If I'm up but have not attained my first 2-point scale, I'll usually bring the stop down to break even. I may bring it if there's a swing high. I may bring it to swing high and have a maximum risk of 1 or 2 points in the trade, or I may cover half if there's a profit and split the difference. In other words, adjust the stop so that I have a net break even on the trade and I'm not willing to risk anymore. Trades can work out in excess of 25 minutes. Just my odds drop significantly. And if you're new on this call, you have to remember, from my perspective and the way that I'm calling the market, I'm trading very leveraged positions, and I have very low tolerance for loss. Meaning, I need to be specific in my entry, always entering almost, I'd say 88% of my trades, and my trade plan calls for entering in the zones, right? And those that I'm not those trades are usually in NQ as opposed to ES. I have a time limit on it, and I have preset targets. So my entry, my stop, and my exit for both my entry itself and the scales are all preset. And the purpose of that is to reduce stress and anxiety and the amount of thinking I have to do during market hours. All my thinking's already been done between last night and this morning, for good, for better, or for worse. I've already done that. I don't want to refigure out the market as it's going other than paying attention to rotation size. The other part is, if you'll notice, one big clue would be in the morning, right? We went from 1858, right, and we rotated up to 1858.50 to 1864.50. That's a 6-point rotation. Then that was followed down by approximately a 10-point rotation down. I want to see what the balance of the rotations up and down are, right, to give me an idea of who has more strength. If I see a big move up like this, and then a counter rotation for 4 points, and then another big move up like that, I don't want to spend a lot of time trying to get the smaller end of that deal, okay? The last piece in terms of reversals, and most days are going to have a pattern that looks like this, just like yesterday's, right? Push up a little bit, push down between 9:30 and 11, we push back up, and then in the afternoon we can either come back to the highs, simply balance like we did yesterday, or come back for a move to the lows or even break the lows, okay? But the majority of the time, it doesn't include this. The majority of the time, it's either this or this, okay? So clearly, we're starting off the day strong, and to fight that is not always the wisest thing in the world. Also, you'll notice on today's charts, usually the zone is like this here. The zone would normally be 64.50 to 62.50 is normally how I would have this zone. It's modified because there's 3 days worth of highs right here between 1866 and a quarter and 1864.50. So I simply moved it back to account for that because it could be easy enough that either one of those levels will provide either resistance and or support as we're breaking higher here, whereas normally the 2 points below would be the area I would be looking to place that. So keep that in mind, that won't be there. And it could be that later in the afternoon, if we break down, that this 1862.50 could still provide a point of resistance back to the downside. I'm just not going to have it on my chart. By the way, also worth noting on the chart today before I finish my scenarios here is that this zone right here, right in the middle, between just below gap fill and Globex lows, this zone right here is a weak zone. It is a zone. We could simply come in. It could go either way, which is why I've labeled it a weak zone. You could come in, find support, and shoot right back up, trap and go higher, right? Or it can flush. And the problem is I don't have a good read on it either way. Hence, I've labeled it as a weak zone, which means it's not an automatic trade for me. And unless I get a real nice fat reason for taking a trade there, I may rather miss and focus instead on attempting to get a trade at Tuesday's low. What's my reasoning here again? Okay, so you have to decide how you're trading. Some traders trade and they have no idea of what they want to do over the longer term, right? Every trade is a chase. They want to find and capture every single trade. I don't necessarily want to do that. What I'm trying to do is find those trades where I can confidently put on large size, right? And that'll fit into my larger trade plan where I'd like to push my win to loss ratio beyond a 70% win ratio, towards 80 and 90%. And in doing that, sometimes that simply means I skip trades or I skip zones that I cannot figure out ahead of time. And this is one of those zones. I know it's a legitimate zone. I just don't know what the traders are going to do here. There's a couple of problems with this zone. If we come down through here and we fail gap fill and we fail Globex lows, right? You would imagine that would open some pressure up to the downside. And that's my concern, is if this breaks hard, we could break right through the zone and come to Tuesday's low before we get responsive buyers back up. Hence, I'm uncertain about this zone and why I'm focusing here. I can tell you the first time into Tuesday's low, I will take a long on the upside. And let me give the executive summary real quick because I realize we're already at 8:06 and some want to jump off the call. So downside, long trades. Tuesday's low, Monday's low. Monday's low, I'll be taking a trade. Tuesday's low, I'll be looking long. Not certain about this zone. I need to see how the price action stacks up when we get here because everyone's going to be gunning for this 1833 to 1831 area. There's strong support. There's an open gap sitting here. I will take a trade here. I'm willing to lose all 4 points, even if it takes an hour I'm willing to lose money here. Okay, these are great points. They've provided fantastic counter trades. Each time we've gotten to one of these levels, we've been 20 points away within 24 hours, sometimes 30 points away from these points. I am willing to take a 4-point loss in this area. So FYI, this one is not a guarantee. I'm going to see how the price action looks, and based off of that, this one I will take along, this one I'll take along, and here I'll take along. So those are the three areas. And then there's areas below, particularly 1827.50 and down near 1821.23 area as well. I doubt we get down there today, but anything can happen. Okay, on the upside, okay, so it looks like we're going to try to open near Globex highs. Who knows if we actually pull it off, but obviously if we open next above Globex high, the first test is can we hold above yesterday's high, which is actually this point right here. Okay, so I would imagine this is going to act as support if we open on this side. It's not, at least where we're opening right now, is not going to offer me enough rotation down to call a trade. If I take a trade, it has to be lightning fast for me. I will not have a chance to call it either way. The first location I would actually look for would be between Globex lows and gap fill. It's a very tiny zone. There's no point in putting a zone in front of this here. Okay, so essentially it's 1859.25 to 1858.5, and here's the problem. You put a 2-point stop behind, and that puts you half a point in front of this zone. It's unlikely that I would take a trade here if I got stopped here, and I'm going to have a good size rotation into this area, and it's going to have to react. In this case, I need to be able to get a scale out of this area in less than 10 minutes. If I enter this thing and I don't have and I can't get that 2 points in 10 minutes, I'm going to start shoring up this stop, and if I can, I'll bring it to break even or just close out the trade. My concern is that we've had day after day is that we're getting a lot of this action right here. Okay, and while there are rotations in and out, I just don't want to get swept through gap fills, and gap fills did not. You'll notice that this was, if you look at yesterday's gap fill, was right here on ES, gave us the rotation, but if you look on NQ, which I'll drag that over here in just 1 second, if you look on NQ, this was gap fill, and it did give a reaction, but you'll notice it was quick, and eventually it flushed. And we're still getting a tremendous amount. This has been characterized in all our markets, right? Once we start going one way, we've kept with very few rotations up and very few rotations down. This price action, right, has me a little concerned. And so in an effort to avoid getting that, right, usually we're getting a 10 or 15 minute pause. But gap fill is a lower odds trade to begin with. So if I take it, and it assumes that I'll have a 6 to 7 point rotation into gap fill, okay, it's going to have to be quick. And so I hope I'm clear on that. And if you're not comfortable trading that gap fill in a small zone on Globex high, you can just simply choose to pass on this trade altogether. There's absolutely zero wrong with that concept. Okay, the stronger zones, once we get below here, breaking above and black below Globex high, Globex low would be reasonable, probably what I would shoot for the first time, right? And then that would be followed by Tuesday's low. On the upside, to take shorts, right, the first thing I'm going to watch out for is open drive higher, right? If that gets me up into the 71, 73 area with a proper stretch, I will probably consider the back of that zone as a reasonable place to take a trade. But understand, I'm willing to take a 2-point stop on this trade and then reload again, unless I'm just seeing vicious open drive higher where the price action is just incredibly strong and keys busting. You'll know it when you see it. You don't have to guess. Look at that price action. The price action looks like it's just zero ticks down and all straight up. Skip the zone. Shoot for the year-to-date heights for a counter rotation. You have to be able to at least look at the dome and make a educated guess as to how strong it is. Yesterday was different. Yesterday we consolidated here, right? And again, this is 15-minute chart, right? So we consolidated here like this. Then we got an algo that pushed us right up into resistance, and then we shot down. It was just a quick stop. It wasn't like we were having vicious buy action go into this, and I can break this down to a 5-minute if it makes it easier for y'all to see that. Actually, I'll go over it here in just a second. So I want to be clear. If we get above year-to-date highs, okay, these zones that are above here, okay, and you can write these down. I didn't publish them. It's 1884 to 1886, and then 1894 to 1896, and then you should put a big fat one right there at 1800. Usually I do 1799 to 1801. Okay, these are at best educated guesses based on where I anticipate the market will get exhausted. Okay, it is hard to short the first time in here. There's nothing here. This is all new time highs, right? Or at least, if not all time highs, year-to-date highs, right? There's no resistance in here other than trades getting exhausted. I would look for tick divergence to guide me up here. And for my coaching clients, you know what I mean? The pattern that I would actually prefer to see is this, and taking a short second time in on this with a clean stop right above, or I would rather miss the short side, okay? If we break out, I'm not saying that we will, I actually don't even think we will, but if we break out, that's what I'm looking for. On trap trades, let's cover that really quick. Okay, there's a couple of places that can trigger trap trades today. Globex high. Really, I'm going to skip Monday's high. I'm going to say it has to be a break of Tuesday's high right here, right? And so based on where we're opening, if we open at 1867.50 and we come in for gap fill and we get below Tuesday's high, I would consider that a triggered trap trade, and I would look immediately actually above Globex high, right? This would be my first target, and then if it stays weak enough, I look for it to travel to the other end of the range, which would be Tuesday's low. I'm not saying it will happen, right? You have to scale on the way down, but that's where I look. And if we set up with a trap again, I can tell you with almost certainty, if we trap or we come in for gap fill, I almost certainly will not take this zone. It's got to hold here, or I'm not interested until all the way down here. There's just too much of a risk. Now, that being said, we could simply come like this and then shoot back up, and then I'll just have chosen not to take that trade, and I'll live with it. Okay, so these are the areas for traps. Okay, above that, a break, and it doesn't have to be a big break, right? A trade above year-to-date highs, then a close back down below year-to-date highs. That could create a trap, and it could send us right to the other end of the range, back to Globex high. If I see this trap here, I'm not going to be very eager to take a long here, okay? The point of explaining the trap trades is so even if you're not capturing them, they're harder to capture, they require strategy, and it's contra to the zone concept, right? But if you're trading the zones, which is the most basic strategy, right? Once you're in here and oops, we've trapped, go to the other most logical area to get responsive buyers, because all we could get in here is we could kind of do one of these and then flush down and then get the counter rotation back up. Okay, I hope that makes sense to everyone. If it doesn't, contact me through email. I'll see if I can explain that better. But basically, if we trap at a location, I'm looking to the other end of the range. So year-to-date highs, Globex high, Tuesday's high, potential trap, followed by traps back up to the upside, right? Globex low, back to the upside would take us to the other end of the range if we break and recapture. And then Tuesday's low is a potential trap. And then also, if we break below, this would be considered a weaker trap, but because it's been untested, if we break below Monday's low and then get back above, you can look for a drive back into the range from there as well. So trap trades require a little bit more work and a little bit more strategy, but those are the basic areas for the traps today. Also, you should have on your chart, I would draw out where the larger ranges are. So this is what the current what I consider the important trend lines and channels that are important. So this one comes, we've been working off of this for a while now, right? This is basically off the top from here to here. This first one right here that we've been working in, okay, that we're gapping above. Then there's one right above, and that's basically we've been getting rejection right out of year-to-date highs. Note that this is actually on a slightly down angle. Okay, and we've been rejecting slightly in front of the actual high, and the reason why I mention that is if we actually got past this point right here, I would actually be concerned that the actual year-to-date high will break fairly easily. There's no volume. These traded no volume up here. Okay, so it'd be very easy to bust through. There's no one to defend this up here, just FYI, so you're aware of it. Uh, once we put these all back together, right, like Humpty Dumpty, let's see which chart I have here. Here we go. This is what it all looks like once I put it all together, and it looks like there's just a mirage of lines. But you can see that when we get to these year-to-date highs, right, easily we can come down, and depending on the time of day and what the market does, the nice thing about these channels is they tend to line up with the time of day and give you nice location. What would be great, we broke above and we could somehow hit this area right here, right, where you have these two lines intersecting. That will often be nice area to take a trade, and it'll kind of guide your trade location, right? Instead of taking the front, kind of shoot for the back here and see if you can grab that corner. That assumes that we're up above and we're rolling back to the downside. Again, all of this needs to take place for me prior to this, between this 9:30 a.m. and 11:30 a.m. Reversal time if I'm taking trades. After 11 a.m., I'm generally not opening trades unless there has been a identification of trend day up, trend day down, extreme volatility, very high volume. You've got to give me a compelling reason to trade past 11 a.m. because I don't like to get stressed out at all. So at any rate, that is the game plan for today. Let's take a quick look at NQ. It's 8:19. So if I can drag this over here. Okay, let's see if I can identify the key areas. Key areas on NQ: prior day's high, prior day's low, Globex high, Globex low. Globex high is 34.45 3/4, still in the same place. Okay, so obviously one thing that I noticed very quickly, looking at where we're trading right now on ES, we are slated to open above, or we're right at Monday's high, just below Globex high. But once again on NQ, I want to point this out, okay, we are not above yesterday's high at all, okay, much less this high that's sitting right here. You might as well actually throw in a little zone right there because that'll probably be a possible point of rejection as well, like that, red, okay, and then you have right above here, that is, I'm pretty sure, the high. Let me get back here far enough to make sure. Yep. And you want to have that marked off as well. I haven't done it, but I'll do it right now. Okay, so we know a couple of things. First of all, in order for ES to advance to the upside, right, we're going to need NQ to get above this level. So before you get overly excited about the whole market running away, right, check what NQ is doing, okay? If it doesn't get above here, ES isn't going anywhere. I'll tell you that right now, unless we're just totally flip-flopping what the scenario has been, right? In addition, right, if we get above here and then we get back below, we fail to hold, look for it to move to the other end of the range. Extremely possible, right? This is Globex low right here. It's where I would expect the first attempt at a responsive buy. Also, that's gap fill, just so you know. And then on the downside, right, we know that we have an issue in two areas. First of all, yesterday was an inside day, so you need to add one more level here, which I haven't added, which is Monday's low. Is probably the true area of support here. Okay, so that complicates this is aimed mostly at my coaching clients because it complicates the picture a little bit on the trap trades. Okay, so the way the traps can set up still, right, is we can come up, test Monday's high, reject, get back below. It's possible to set up a trap that way. You obviously, because all of this is all in a very close region, you'd want to see it get back below the Globex high relatively quickly. And then if we were to get below all of these, right, look to the other end of the range. So the first area we're looking for is gap fill, right, to see if we have responsive buyers. If that fails, then we're looking to yesterday's low, followed by Monday's low. Okay, the trap can be set the other way as well. We can come down, test Monday's low, get back above yesterday's low, and trap in the other direction. Remember, the traps or what I'm expecting still is consolidation and non-trending trade action. How do I know that we're going to be in balance or that we've moved into balance? After the first hour, the NYSE tick will be characterized by a plus 500, minus 500 tick, which we were in all yesterday afternoon. If you want to see that, that was this right here. This is balance. There's almost no edge in balance. Okay, you can try to trade it. Good luck. Most people just get chopped up. Okay, and then also we were in balance. You'll notice the edges were the best places to enter the trade. The middle was the crummiest place to enter a trade, and I would stress that again for today. I would actually go with balance first as opposed to trend day up. I'll know I'm wrong on this, by the way, if NQ gets above and holds above 3660. I'll have to change my scenario. Even with, and realize the market can switch, right? We can go into open drive higher, right? Then get to 930 and simply go into an extended range, even if that range has an upside bias, right? But the plus or minus 500 tick is important because that's where it head fakes traders in high and it head fakes traders in low trying to capture momentum, only to come back and snag them. Don't make the mistake of trying to trade momentum on ES. It's very, very difficult. Let's see if there's anything else that I've missed. I would like to take a look at the volume profile real quick. See if there's anything there because I haven't looked for myself yet this morning. Hold on 1 second here. Okay, so obviously the first thing I see in ES, we're having a series of slightly lower highs. Obviously that we would like to change that even within this. Okay, from a bigger picture perspective. Okay, we got to get above this right here. It's clearly an area, right, that's acting like the top of a range. And if that's the top of the range, all right, this area down here, right, that's acting like the bottom of a range right there. So there you have, that's the range we're in. And I would say extensions down to this area, which is that, I have it marked on the chart, 1831 area. Okay, I'd say would act as the extension, which would mean, right, we break this, everyone gets scared, we come down here, we find responsive buyers, we get back in, right back up to the other end of the range. That's what I expect is going to happen over the days and weeks to come, and we just kind of stay in here, which is fantabulous. There's nothing better. It's a great way. It's a great place to make money. On NQ, same. There's NQ right there. Same scenario. We clearly have a top of the range right there. We can see that we're struggling at this point to get above 3,700. So again, 3,700 where it's 3,645. It's going to be a stretch just to get to 3,700. So while everyone's betting that ES is going to break out, I do think NQ is going to have to strengthen up or have one hell of a day to help lead us. As you've seen, when it gets weak, it's been dragging ES down. Maybe that's about to change, but we shall see. Also, another thing to keep in mind, by the way, IPOs are heating up, and corporate buyouts are heating up in the tech sector, and that could really start to drive some of this business. That's generally a sign of a healthy market. That's a macro, very macro vision, but it's hard to get bearish when that's going on and companies are getting bought out. It could, I guess some people could read it as a sign of a top, but it's been my experience when that process starts and just starts to get media attention, that cycle can last for quite a while. Has no input on today directly, obviously trade the zones, but I would not get overly bearish at this particular juncture on NQ. In order for me to get bearish, okay, we can see that we're pretty much holding up at the bottom of this range right here, and I need to see us get really below this point to get fearful. In other words, we could come all the way down in here, and I still think we look pretty darn good net. I don't think anyone's going to get scared as long as we hold above these levels. And so, anyway, that's my 2 cents. I'm going to see if anyone has any quick questions. Otherwise, I'm going to get to work. Looks like everything's clear. My name is Simon. I'm with Trade and Perform Coaching. I'm going to go get ready for my day. I hope everyone makes a lot of money. We'll talk soon.